Hello, and welcome back to another deep dive.
Good to be here.
Today, we're plunging right into Bitcoin. It's always moving, isn't it?
Always.
You might see the price just sort of consolidating, looking quiet on the surface, but trust me, there's a real whirlwind underneath. We've got these big institutional players making moves, some really key regulatory signals popping up, and, well, even some, let's say, unexpected political factors shaking things up.
Yeah, it definitely feels like a moment of pretty rapid transformation for Bitcoin.
Absolutely. And it's important to stress, I think this isn't just, your standard daily market update.
No, not at all. What's fascinating here, I think, is that we're observing a pretty pivotal moment. You have several sort of powerful undercurrents all converging.
Converging. How so?
Well, they're basically redefining Bitcoin's place, its role in the bigger financial landscape. These structural shifts happening right now, they're arguably much more significant than just the day-to-day price swings you might see.
Okay. Structural shifts, powerful undercurrents. That sounds big. How do we actually unpack that? What's the best way to look at this?
Good question.
Our mission today is really to give you that framework, that analytical lens, so you can really understand these interconnected themes.
Right.
We'll get into that price tug of war, this great rotation of institutional money, the regulatory tailwinds, which seem pretty significant, and this new wild card, these politically linked crypto things.
And you can't forget the Fed, right? Its shadow looms pretty large over everything.
Definitely. Okay, let's start with the price then, the immediate picture. What's happening right now?
Well, looking at the last, say, 24 hours, Bitcoin's been stuck in a pretty tight range.
Yeah, I'm seeing mostly between, $110,300 and $112,600, hovering around $111,000.
Exactly. And technically, you can see this sort of ascending channel forming on the hourly chart, but there's resistance.
Right around $111,500.
But the real key level, the one everyone's watching, is $112,500. That's where sellers keep stepping in.
Okay, so if we break above that,
then maybe we start looking towards $115,500. But, if it fails there.
then we look down. Support levels like $110,500, maybe $109,250.
Yeah, and there are some big clusters of buy orders stacked up lower down around that $104,000 to $105,000 zone. That seems like a strong floor for now.
And this tight consolidation, the low volatility, what does that actually tell you? Is the market bored?
I don't think it's boredom. It's more like strategic balance, like a coiled spring just waiting for some kind of catalyst.
Like coiled spring, I like that.
Yeah, because while some short-term indicators, the MACD, the RSI, they show some upward momentum bubbling under, the derivatives market tells a slightly different story. It's more nuanced. You've got this persistent negative skew in the options market.
Meaning downside protection is more expensive.
Exactly. People are paying up to hedge, which tells you participants aren't just sitting back. They're actively managing risk. They expect a move, possibly a sharp one.
Okay, so the market's coiled, waiting for a catalyst. And speaking of shifts, what about this capital rotation idea?
Ah, yes. We're seeing signs of that classic bull market rotation.
Bitcoin dominance was way up, wasn't it? Like over 65% back in June.
It was, and it's been declining since. It looks like institutional money is flowing back into Bitcoin, kind of setting that stable floor we talked about.
Right.
While the more speculative capital, the hot money, is moving into higher beta altcoins.
Things like Ethereum, Solana, and tokens in their ecosystems, like AAVE, RY, Drift.
Precisely. In that dynamic, Bitcoin starts acting like this stable anchor, a governance and inflation-hedged anchor asset.
An anchor asset.
Yeah, it gives investors a solid base, which then lets them feel more comfortable taking on more risk elsewhere in the crypto space.
And this is all happening while the market's also trying to figure out the latest macro data, right? Like that strong PCE number.
Exactly. That personal consumption expenditures reading definitely raised some eyebrows about inflation sticking around, which, of course, ties back to the Fed.
It always comes back to the Fed. Okay, let's pivot. Because this next part, the ETF flows, this seems really interesting. August was all about Ether ETFs, wasn't it?
It absolutely was. We saw, $3.87 billion in net inflows for Ether ETFs in August.
Well, Bitcoin ETFs actually lost money, like $751 million in outflows.
Correct. but that trend has just slammed into reverse sharply.
Okay, tell me about this reversal. What are the numbers now?
Well, just on Wednesday, Bitcoin funds pulled in another $301 million in net inflows. That was on top of Tuesday's $332 million surge.
Wow. Okay. So that's over $630 million in just the first 2 days of this month.
Over $634 million, yeah, and almost $1.1 billion over the past week. It's a huge swing.
So what is that rapid reallocation signal? What are institutions doing?
It's highly significant. It strongly suggests institutions are rebalancing. They're viewing Bitcoin more as that conservative long-term macro hedge.
The digital gold narrative again?
Pretty much. A core Treasury reserve asset to hedge against inflation, policy uncertainty, you name it. They're treating it differently now.
And Ethereum?
Ethereum seems to be viewed more like a high-growth tech stock. Higher risk, maybe higher reward, but a different category.
So a bifurcation, a more sophisticated approach.
Exactly. It shows a maturing understanding in the institutional space. Look at Fidelity on Tuesday. Their Bitcoin ETF saw over $132 million in, while their Ether ETF saw $99 million out.
A direct switch.
Pretty clear illustration, yeah. And BlackRock's IBIT also had strong inflows, over $72 million.
Okay, so institutions are rotating back to Bitcoin as this sort of anchor asset. But Bitcoin's still volatile, right? How do they square that?
Well, part of it is the infrastructure maturing, which brings us to another key point.
Don't what?
U.S. Bank, the fifth largest bank in the country. They just officially resumed their crypto custody services for institutional managers. And that now includes Bitcoin ETFs.
They'd paused that before, hadn't they, back in 2021?
They had, citing regulatory headwinds at the time.
So what changed?
Well, this is fascinating. U.S. Bank explicitly said greater regulatory clarity was the key reason for restarting the service.
Ah, okay. So regulation is actually helping here.
It's a critical de-risking event for these big asset managers. A lot of funds have to use established, trusted custodians. It's in their mandates.
And the lack of those has been a bottleneck.
A major one. So U.S. Bank coming back in, especially using NYDIG as a sub-custodian, basically removes that barrier.
And you think that's directly linked to the ETF inflows we just discussed?
The timing is hard to ignore. It really looks like asset managers were just waiting for this kind of green light, this validation to pull the trigger on their Bitcoin allocations. It shows how much regulatory clarity matters.
Okay, so we have institutions rebalancing, regulatory clarity improving, custody solutions coming online, but then there's this other thing brewing.
The more unconventional side.
Yeah, let's pivot to something completely different. Politically charged, even. These Trump family-related companies going public.
Right. American Bitcoin, ABTC.
Co-founded by Eric Trump and Donald Trump Jr., it just listed on the NASDAQ. Mining and treasury firm.
And the first day was eventful.
Eventful is one word. Extreme volatility. It soared over 100% at one point, closed up about 16.5%, but trading got halted, what, 5 times?
Wasn't 5 times, yeah.
Volatility pauses.
Their goal, they say, is maximizing Bitcoin per share, like MicroStrategy. And they just doubled their mining capacity 24 exahashes per second. That's huge.
It is. And ABTC is a really vivid example of that friction, right? When this hyper-volatile, very sentiment-driven asset class smashes into traditional market guardrails.
Yeah.
And it's really crucial, I think, for listeners to grasp the difference here. An ETF is designed to track Bitcoin's price. An operating company like ABTC, its value depends on way more factors.
Including politics.
Including political sentiment, management decisions, mining costs, all sorts of things. It's a very different beast from just holding Bitcoin or a Bitcoin ETF.
Yeah.
It highlights the challenge for exchanges, for regulators.
Well, ABTC wasn't the only one, was it? There was World Liberty Financial, too.
Right, their governance token, WLFI, that started trading, too.
But with a very different reaction. Quite negative, actually. Yeah, after a quick initial pop, the price fell off sharply, down anywhere from 18% to nearly 50% within just 48 hours.
Although, on paper at least, it apparently added something like $5 billion in theoretical wealth to the Trump family because of their locked-up tokens.
That's the report. But it really raises this question about, maybe a whole new sub-asset class emerging here.
A political crypto class?
Kind of, because the value, the volatility, it seems driven less by fundamentals like hash rate or cash flow for ABTC and much more by political sentiment, media cycles, the Trump brand itself.
So a totally new kind of risk for investors, political risk.
Exactly. The performance of these assets could almost become a proxy for political fortunes. Imagine that direct link between DC drama and crypto market swings.
Wow.
And of course, it's important to note these ventures have drawn a lot of criticism. Lawmakers, government ethics experts, Concerns about potential conflicts of interest are definitely out there.
Yeah, given the family's potential influence on crypto regulation itself, it's complicated.
Very much so, a messy intersection.
Okay, definitely a whirlwind, blurring lines. Let's shift gears again back to the macro picture. The Fed meeting is coming up soon, right?
Yep, the FOMC meeting, September 16th to 17th. Everyone's focused on that.
And Friday's jobs report is the key piece of data before that.
That's the big one. It'll heavily influence their decision on interest rates.
What's the market expecting right now?
Well, current pricing shows a 97.4% probability of a rate cut, 25 basis points.
Pretty high probability.
Very high. But if that jobs report comes in weaker than expected, it might give the Fed cover to be more aggressive, maybe even a 50 basis point cut.
And generally, lower rates are seen as good for assets like Bitcoin.
Generally, yes. Bullish for risk assets. It lowers the opportunity cost of holding something that doesn't yield, like Bitcoin, and it can weaken the dollar, which Bitcoin is priced against.
But didn't Bitcoin used to be kind of disconnected from all this macro news? I remember a report, maybe from the New York Fed in 2022, saying it didn't really react much.
That's a great point. And I'd say that historical data, it's rapidly becoming obsolete.
Why? What's changed?
The institutionalization we've been talking about, the integration through ETFs mainly, it's fundamentally changing the dynamic.
How so?
With these massive institutional inflows, Bitcoin is now sitting in portfolios that are actively managed based on macroeconomic outlooks. So when the Fed signals a rate cut, those traditional portfolio managers, they're now much more likely to increase their allocation to risk-on assets, and Bitcoin is now firmly in that category for them.
So this upcoming FOMC meeting is actually a really big deal for Bitcoin, maybe more than previous ones.
Arguably, yes. It's one of the most important in Bitcoin's history, you could say. It's the first major Fed decision in an era where Bitcoin is truly an institutionalized asset.
Its reaction will set a precedent.
Exactly. It'll really show us how strong that correlation with traditional markets has become.
And speaking of the Fed, didn't they just withdraw some old crypto guidance for banks?
They did. That 2022 supervisory guidance, that's another significant macro regulatory signal.
What does withdrawing it mean?
It signals a shift, I think, moving from just cautious observation to more active integration. Basically, treating crypto like a legitimate part of the financial system that needs normal supervision, not special scary warnings.
So more reinforcement for that institutionalization narrative.
Precisely. Another layer of systemic legitimacy being added. It feels like the system is adapting to Bitcoin now.
Okay, let's try and tie this all together then. What does this all mean for you, the listener, right now?
Well, the past 24 hours, as we've seen, really highlight a market at a pretty historic inflection point.
That quiet price action is deceptive then.
Very deceptive. It looks like consolidation, but it's the market digesting a huge paradigm shift underneath. You've got that regulatory green light feeling, essential institutional infrastructure like custody coming online, clear evidence of institutional money rotating back in via those ETF flows.
Those all sound like powerful, long-term bullish signals.
They do. They're strong tailwinds, but at the same time, you have this structural maturing happening alongside the, frankly, chaotic emergence of that new politically charged crypto subsector.
Introducing new kinds of volatility and risk.
Exactly. New risks to navigate. So the market's immediate path, it really seems to hinge on that upcoming FOMC meeting.
And if the Fed cuts rates, as expected.
A dovish outcome like that is probably going to have a much more pronounced positive effect on Bitcoin's price than it ever would have before, simply because of who owns it now, those institutions.
Right. So given all that complexity, what should people be watching most closely in the next few days?
Good question. I'd say keep a close eye on those ETF flows, especially after the FOMC decision. Does the pro-Bitcoin trend continue or even accelerate?
Okay. ETF flows. What else?
Any follow-up actions or statements from exchanges, regulators reacting to the latest guidance, or maybe even the U.S. bank move? And just out of curiosity, maybe watch the performance of those politically linked assets, like ABTC, not necessarily as an investment, but as a kind of barometer for retail sentiment and maybe political noise bleeding into the market.
Interesting. A sentiment gauge?
Could be. Look, the current environment, all things considered, it suggests the path of least resistance for Bitcoin is probably upwards.
There's always a but.
But yeah, this deep dive makes it undeniably clear, doesn't it? The market is now way more intricately linked to macro developments than ever before.
More than at any point in its history.
Definitely. So the final thought maybe is, How does that new interconnectedness ultimately influence Bitcoin's path? Does it dampen its sort of disruptive potential, or does it just reframe it within the traditional system?
Something to definitely keep thinking about. Thanks for breaking that all down.
My pleasure. Lots to watch.
Indeed. We'll be back soon with another deep dive.